Hello, this is Howie, and I'm here to help you win with money. Today is Friday, July 31st, last day of the month. Let's do some live trading using Etrade. Let's take a look at this particular option. This is a cover call. As you can see, this is out of the money and it's going to expire worthless today. So I can adjust the trade. I can roll it or just let it expire naturally. Because this is worthless, it's probably going to cost me 1 cent to close or $1. And if you're wondering why is rolling adding 1 week at the same strike price is commanding a high premium, and it's because earnings is next Wednesday on August 5th and guidance is supposed to be really good. I already have a existing cover call for $100, so what I can do is just move it up maybe something like this and collect $36 today minus the fees. You're moving nearly $20 away from the current market price, so that could be a good trade. So let's look at the probabilities. If you pick a strike price of $95 for next week, 10% chance of it being true, so you have a 90% chance of winning. If you want something safer, you go over here a little bit higher. So I already have one at right here at the 100, so I was entertaining opening the cover call at a 8% chance of losing, so I have a 92% chance of winning. Now that's very conservative, but that's okay. Let's see if we can get that trade on. And I'm going to increase it. Instead of just the mid, I added maybe, let's make it a few pennies above that, and let's see, can we get this trade in. Let's submit the trade. Let's see if it went across. And if you go over here, you can see that it just went across right here. And on the account, you can see that this is the new one that I just did. Here's a cover call that made money for me. You can see this here is the 16. It went from $17 to $2. So let's add some risk back into this trade. So I'm going to lower the strike price roughly a couple dollars above where it's trading at now. You're only going to make after commissions $1 on this trade. But I already made the money already. But if you do nothing, that's basically caps your earnings. So I just added risk back into a trade. That's how you do it. Since we already have 2 on the same date and we have 1 that we just fixed, this 17 one I already made money also. So we're just going to roll this out for a couple more weeks. So we'll just do a little bit more than 5. We'll do 7 first. Eventually I may have to lower it to 6 to get it executed. So let's see what happens. And that worked. Trade went across. Let's look for something else to trade. AMD expires today. I have this call credit spread, and you see it's going to expire worthless because it's not going to pop $70 before the end of the market. So I can close it for $2, or I'm just going to roll it. And let's add some more time. When you add a little bit more time, it adds a little bit more risk. And then because this is a very volatile stock, it can move quite a bit. I'm going to move it to a safer strike price, and we'll do a $5 wide. And here you go. I'll be happy with 21. If you want to check the odds, let's take a quick look at that. Let's punch in AMD here, and we're gonna use the and I was looking at the 600. 600 is here. Oh, so you see the odds are really safe. 95% chance of winning. I can even go a little bit riskier if I want. If I left it at 560, so that's actually not a bad thing. And there should be no earnings, but I know AMD has been moving up quite a bit. So maybe this is too risky for me. Let's maybe consider like 570 0.5. It's 10% odds or 90% chance of winning. So this is what it looks like when you adjust it. You see it's already up $7 today. I'm going to move it up. There should be no earnings release, but there's other companies that are releasing, and if their numbers are good, like Nvidia or something like that, or other chips, then this company can move up. So this is why this can be risky. I don't want to make $34 and lose $500 because potentially I'm on the hook for $500. So let's actually not do this, and let's just go a little bit safer than what we looked at, even though we know what the odds are because we checked it. Okay, that's not gonna work. Oh, because I did the wrong button. Okay, that can work. So a little bit safer. It's $10 safer on the other one, and I lose just a little bit. I lose $10. Let's try to squeak more out of this. Let's try to do that. So I'm playing on the call side. I'm doing a call credit spread, and there you go. AMD is executed. Let's look for another trade. Here is I have a put that I sold, a cash secure put. It's winning in my favor, so it's going towards 1 penny or worthless. So I'm gonna roll it, but I'm basically moving the strike price closer to the market price, and I'm collecting $3 for that. Because I have 2 minus fees, I collect $4. Now on the other side, if I have a cover call that's above 14.50, I may add risk on the call side also. So let's take a quick look at that. And sure enough, I do have a cover call on the same date. So what that means is I have a put that's under the current market price, and I have a cover call that's currently above it. So there's really no risk. I made money on both sides. So I'm going to move this. So basically I'm narrowing my endpoints a little bit closer to the market price, and I collect money on both sides. As long as it stays in between that range, I'll make money on both sides. And that's the plan. Let's place order. And that one went across also. You see that? Let's look for another trade. Riot Blockchain will report earnings on August 5th. And so far, these are all fine as long as it stays in a range. Because I already have one at $25.50 for cover call. This one, I already made $6. I may lower this, add some risk into the trade. But I don't want to lower it too much in case Riot does a big move next week, which I have seen that recently. But that's why I just want to add a little bit of risk to extract a few more dollars out of this. But maybe this is the right way to do it. We'll do something like that. Collect our $4 minus fees. And I think that trade went across. There you go. So you've seen enough of it. Sometimes I adjust up or down, and then if it's moving against me, I would add more time to it, and I move the strike price away from the current market price. But for today, you see on most of these adjustments, I'm moving it closer to the market price, so I'm adding risk to the trade. Okay, have a good day. Bye-bye.